Good afternoon and welcome to BizTech's ASEAN Midday Market Watch. Our guest today is Jeff Halley. He's a senior market analyst, Asia Pacific at OANDA. Now, Jeff, great. Thanks for coming in for the first show of the year.
Yes.
So let's get cracking and take a look at how markets have been performing on the first trading day. We're starting on the red zone at the Nikkei, which is down 0.63% at 27,271.34. But the rest is pretty much green. The Shanghai Composite is up 0.91% at 3,504.57. The Hang Seng is at 27,434.61. It's up 0.75%. The ASX 200 is up it's up 1.42% at 6,680.7. The Kospi is up a whopping 2.33% at 2,940. Now closer to home, we've got Bursa Malaysia trading at, and let me just
down.
It's down 1.63% at 1,600.65, and the SGX is up 0.32% at 2,853.02. So, Jeff, what do you make of the opening morning in markets around the region?
Well, Asia's mostly positive, as is Australia. New Zealand's closed today. Because of the strong manufacturing PMI data that we saw, I mean, right across Asia and Australia, we saw strong manufacturing PMI data, which suggests that Asia's recovery is becoming more broad-based and remains well and truly on track. That's lifted equities mostly around the region. We drill down to Japan. It's in retreat because the government is considering some state of emergencies at the request of Tokyo and Osaka cities. So it looks like lockdowns are finally coming to Japan. South Korea's rallied aggressively because the Bank of Korea has said that they will start including employment amongst the factors that they consider when setting monetary policy. So that's why Kospi is up so strongly today. They're assuming that it's going to be very dovish and perhaps we're going to see lower rates. And the other big mover, if we saw KL, it seems to all be glove makers. So
yeah.
My feeling is that on the first day of the year, investors have come back in and said, oh, COVID-19 vaccines, we're going to need less gloves, sell glove makers. And now I don't think that's really entirely correct, but that seems to be the sentiment today.
Now, looking close to KL and in Singapore, the GDP numbers, the advanced estimates were out this morning. And Singapore's GDP fell 5.8% in 2020, which is much better than the official Ministry of Trade and Industry forecast of between 6 and 6.5%. So what is your take on these numbers and your view in 2021 of the Singapore economy?
I think it's more of an asthmatic recovery. That's what it's showing. So it's showing a recovery, but a very, very slow recovery. We all know Singapore took a huge economic hit in the first 3 quarters of 2020, started to see those green shoots as they got COVID-19 under control in the last quarter. And I think that improvement in GDP reflects that. Singapore is a very open, trading, tourism, transport dominated economy. None of that's happening right now in the world. So although Singapore will recover, I think the recovery will really only start picking up pace once international borders and travel starts. That's going to require vaccines. And I don't think we're really going to see the impact of the vaccines until the mid-year. So I think that Singapore's probably got another 6 months of hard work ahead of it before it starts really regaining momentum.
And Jeff, taking your cue on that, I think that seems to be a general consensus for a lot of economies around the region that the view is that the economies around the world will take off in the second half of the year.
Yeah, look, I think it's going to get worse before it gets better with COVID-19, and I think that's particularly evident in Europe and in Britain and in India and in the United States and Brazil and these other countries. The vaccines aren't going to be a magic panacea. They need to get them out there in volumes, and most of them are 2-shot vaccines, which makes it doubly complicated. Yes. So, we've got a lot of hard work ahead of ourselves. I think if we were going to look to see how it does work, though, I'd be looking at Israel, because Israel has managed to vaccinate over 12% of its population within the space of 1 month. And I think by the end of January, they should be at that 60 to 70% herd immunity level in Israel.
First in the world to hit that.
Pretty much. I think we'll have a real eye on what the future holds by looking at Israel as this month goes on. But for the rest of us, I think we've still got another 3 or 4 months of sort of this status quo now before we start seeing that acceleration in the recovery.
Now, Jeff, markets have all their eyes also on the runoffs in the US. Excuse me. What is the expectation of that right now?
Look, I don't think the markets are really pricing this in, and I've been beating this drum all last week. Georgia is on my mind, so to speak, to paraphrase Ray Charles. It's a very, very important election. It's 2 Senate seats because that's the way that Georgia works. Now, if the Democrats win both of those, they will have control of all 3 houses, including the White House, and will have an unfettered legislative agenda. That will probably be taken quite negatively by markets in the short term, because it will imply that income taxes and possibly corporate taxes are going to rise, particularly for the rich. If the Republicans win just 1 seat, they will retain control of the Senate and will then act as a blocking mechanism towards President Biden. And it could make President Biden an almost lame duck president before he even starts, because he's going to really struggle to get anything done. Now, the markets like certainty and they don't like lots of change. And perversely, despite what perhaps people out in the real world may feel, that will probably be taken as quite positive by markets. And I would expect to see equities rise and the dollar weaken in that scenario. The election itself is too close to call, and it could run for a few days before all the counting and recounting is done. So this situation could be with us all week, and it could cause some quite substantial volatility in stock markets.
Now, looking ahead and taking your cue on what's ahead this week, what are the key numbers and reports we should be looking at that will move markets?
Well, we've got a heavy data week. We've got all the PMIs. We've had Asia's PMIs today. We've got European PMIs this afternoon, which should actually show manufacturing is resilient as well. So that will be bullish. We have ISM manufacturing in the US, FOMC meeting minutes in the middle of the week. And then at the end of the week, we have US non-farm payroll. So we've got a lot going on this week. Yeah. So I think a lot of the data that comes out between today and Wednesday, probably Thursday Asian time, that will be drowned out in the noise of this Georgia Senate elections. The non-farm payrolls will be a live market moving event. We're expecting them to rise by just 100,000 jobs. So if that comes in much lower than expected, that again could see a correction lower in equities. And on top of that, we also have OPEC Plus meeting today to decide the next month's production targets.
Well, Jeff, thank you very much for your insights and your time.
Always a pleasure, mate.
We've been speaking to Jeff Halley, the Senior Market Analyst at OANDA, Asia Pacific at OANDA, on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations.